country's making money on the rates that it holds today. They're not going to lose money just because the current administration is pitching a fit about the interest rates. They're going to hold to it because they are a business just like everyone else, just like in the other industries. Mortgage industry makes money too, and if they can continue to do it at their current pricing, they will do it. Later generations, sorry, you're going to see more average mortgage rates. Back in the 20s through the 40s, saw closer, just above 4%. The boomers up into 64 saw a little bit less. Gen X saw a little bit less up to the 80s. The millennials from the 80s to 96 saw about the same flat market. Gen Z, 97 to 2012, you've seen some of the highest interest rates that we have seen as origination in 20 years. You might be surprised, by the way. Gen X and the millennials probably lock in at the best rates over the past few years at 4%. That's great news for millennials who are coming into an age where upsizing from their starting homes are going to be a factor. But millennials, as they come into their prime earning years, are going to actually make more money than all of the previous generations because they purchased at such a high rate of exchange. When you talk to your millennial clients, show them some hard numbers. That'll help demonstrate their market power. Work with a lender that hosts classes on refinancing, investing, purchasing second homes, working in states that allow second home benefits. Millennials may not realize how much purchasing power they have, and you could be the key to unlocking that potential for them. Which brings us to equity gains. Equity gains remain consistent, by the way, for the long run. It makes sense why most Americans believe that real estate is still the best term investment. Over time, homeowners consistently continued to build equity year over year, with just a very few exceptions. Homeowners continue to have the smallest gainers in average home sales since 2020, and it's paid off tremendously for those that have bought and held real estate. Again, you're not going to make your money overnight. Sure, there's some anomaly stories out there, but as a general rule, there's a long airstrip to you being able to capitalize on the market shifting. But it's a tremendous boost in personal wealth simply from owning a home. If you look at the best and worst states for equity growth, the numbers will show you how lucrative real estate ownership can be as a long term investment. Remodels are also slowing down considerably. I have to say this is probably a direct result of fear of what the market is doing in tariffs, fear of the costs of what these improvements will be because of the cost of materials. It's typically tied to property sales, so it's no surprise with a cooling market that remodeling projects also slowed down a bit. But in essence, there's a reduced need to conduct repairs or improvements if you're selling the property, or sorry, if your selling of the property is not on the table. At higher interest rates, it makes it more costly for people to borrow money, so it makes it harder for people to fund these projects. Now, remodels are not going away completely, even in a slower market, because homeowners will always find a need to have some funds to do routine repairs. Routine repairs lead to projects, which lead to complete renos. Largest sources of financial worries in the United States still ranks highest with inflation, where 29% today believe the high cost of living is a problem. Now, that's considerably better than last year and prior administrations, where 41% of the people believed that inflation and the high cost of living is going to be our downfall. Now, down considerably to 29%. That means we're getting a stronger faith in the financial or the inflation movements that are happening as a country. Cost of owning and renting a home is about the same at about 14%. Lower wages is a larger concern now than it was in previous years. People are seeing more job cuts, more major industries that are focusing on newer technologies versus employees. There's a lot of factors going on out there that are making that a decisive play. But just as real estate market is constantly shifting, the typical American worry does as well. Um, you need to concentrate on what is your client's story and sellers. I'm going to tell you, your story is critical to how your home sells and how you're negotiating with the buyer's side. Buyer's agents, I'm going to tell you, the second that you put in the offer towards the seller's property is when you're going to start to learn what type of negotiator they are, what type of investor they have become, what type of strategies they have, and whether or not they are looking to sell their home and make an overall market gain because of when they bought it, or if this is someone that has not had their property for a very long time and is going to be kind of locked in based on the amount of money that they have spent on the property and thus may not be that much more negotiable. Equity growth in household wealth is expected to continue to rise. It has every single year, going back to 2024, and it's expected to continue all the way through 2029. Potential growth in household wealth over the next 5 years, based solely on increase of home equity. If you purchase, say, a $400,000 home, goes from 400,000 at a 5-year plan to 472,000 in value. So as long as you're not in putting $72,000 into that same house into 5 years, you tend to probably capitalize 80% of that growth. If you're staying in a home 10 and 20 years, you have to expect to be able to double and quadruple that amount. Vacancy rates are also suggesting that the demand exists for renters over homeowners currently. Vacancy continues to keep tabs on the number of rental units that sit as empty. That's what it focuses on versus homes that are vacant that are ready to be sold. These are both indicators of the health of a housing market. Low vacancy rates means that there's not enough supply of houses. High vacancy rates means that sellers have more options. Over the past several years, data from the US Census shows that an increase in vacancies, which suggests there's more empty units, properties are sitting unsold more than ever before. That also translates to the price of starter homes is not as affordable. Half of the US states now have at least one city, one major city, where a typical starter home is at $1 million. This, Florida being probably number 11 at that list. These are all things that you have to consider when you're putting these things together. If half of the US states now have at least one major city where the average home price is at $1 million, and that's a trend that's continuously going up, that means that just 5 years ago, there were 85 cities that had that same difficult swing. Today, that number has grown to 233 major cities, one of several real estate trends that are shaping affordability across the country. For real estate agents, this is a critical contingency for you to keep in mind. With more and more homes becoming less and less affordable, you're going to need to start getting creative and resourceful when it comes to knowing what neighborhoods to look at so you can find homes that are within your client's budget. You need to know your neighborhoods. You might even need to become knowledgeable about financial assistance programs that are going to help people get in to help bridge some of the affordability gaps. But regardless, given that trend of increasing starter home prices doesn't seem to be going away anytime soon, that buyers who take action sooner rather than later can lock in properties while prices continue to climb. Look, real estate is fascinating. Tons and tons of creditable data out there. And there's a whole lot of people that are just talking. It competes with every industry out there as far as marketability and fluctuations. You can have complete shifts that happen overnight, peaks and valleys that shake up even the most seasoned veteran agents. So when buyers and sellers come together to complete a transaction with someone that curls up in a fetal position, it makes it very difficult for you to win. You need to arm yourself with information, with data, with fact. The information in these real estate markets and charts and reports that I'm going over this morning dispel every common home selling myth. This should help you facilitate more wins for your clients and for yourself. And for those of you that are independent sellers and buyers, yes, now is the time to put your home on the market. Yes, now is the time for you to buy your property.